Stocks are mixed for the day. Bonds are up. Gold is flat. If you've not purchased our book, just shipped out a number of them today. What a great Christmas present to give yourself, Charting Your Way to Wealth. If you've got a friend that wants to know how the stock market works and wants to get into investing, slant trading, learning how to do it, then I encourage you, share this book with them. Buy one for them. We autograph them all, send you out a little note, and we so appreciate your support and your help. You can also be nice at Christmas time and become a Patreon member. You can see all the links to purchasing the book and to being a Patreon supporter and all the wonderful benefits, including for the entry level. You get to participate in a Q&A once a month where we actually review the stocks that you are interested in looking at and help you figure out if those are things you can analyze and practice trade, in addition to that intermediate level where we call you for personalized training once a month and send you a free copy of the book. So think about all those things, and we will continue to work hard to provide you with everything we think you need to start learning how to follow and track the stock market. And thank you all for making us one of the top podcasts in the world in multiple categories, from stock trading to stock charting to stock market. Thank you so much. Let's jump into the markets. We always start with the S&P 500, always start on the weekly chart. What do we see going on as we get through Thursday, going into the last day? Remember, shortened trading week because of President Bush's funeral. But we had our last big down week, was the week ending the 23rd of October. And as we saw that being a big down week, the following week ended up being really a doji, lots of indecision tending up. And then what we've seen so far is a green spinning top. We have for the week both wicks on the top and bottom, your classic spinning top. Again, it means indecision tending up, not as much indecision as the prior week's doji. What's really important to pay attention to, of course, is that our price percent oscillator, our main indicator, we'll be sure to put that training about the price percent oscillator at the end of today's podcast, the link to it in our video, and you can find that, of course, if you're a subscriber to chartingwealth.com. You'll see in the show notes, and you'll also see at the end of the video, that's where you'll find that training. And if you're listening to us on a podcast, then I encourage you just go to either Charting Wealth YouTube channel or chartingwealth.com, the website. You can see the video and take that training. But the price percent oscillator is nonetheless heading down, even though it's a bit of an up week. Again, a week of indecision. And that up has not made it as high as where things started going down all the way back on the 23rd for that last strong down week. So things have not recovered as far as the Heikin Ashi candlesticks go. Derivative oscillator losing downward momentum. We go from the weekly, that's our long chart, to our intermediate chart, medium chart. That's the 2-day. And of course, so far, this latest 2-day candle is actually, now remember, the last one drew on Tuesday. Markets were closed on Wednesday, so the current candle won't close until Friday the 7th. So we have a down candle forming, pushing down through the weekly trend line. 2-day is still in a confirmed up move, so we see the derivative oscillator losing momentum. Price percent oscillator still sliding sideways, so don't have anything there yet. 2 days going one direction, weekly's going another, so we don't have a trade. We're waiting for things to settle out. Of course, with the big slam down that we saw over the day on Tuesday, what we see as far as Wednesday goes is we had a lot of movement down on Tuesday. I'm sorry, didn't have anything on Wednesday. Had a lot of movement down in the morning and a bit of a recovery in the afternoon to really make the day not too bad, 0.11%. But the 4-hour chart did cross over in the morning after things topped out and then started slamming down in the afternoon on Tuesday. And again, remember, markets close Wednesday, so down strong on Thursday. A little bit of recovery in the afternoon on Thursday. So again, derivative oscillator gaining downward momentum as you expect an oscillator to do. Price percent oscillator heading down. So waiting for things to shake out in the S&P 500. Nothing to trade right now. What's going on QQQ? Well, it was up for the day. Unlike the S&P being down, that's why we said stocks mixed, up 0.71%. So far, we see a bigger up week, but again, that up week is still not a recovery to where things slammed down on the 23rd, the week ending the 23rd of October. So we're still in a confirmed down move. Price percent oscillator still ticking slightly down. Derivative oscillators losing downward momentum. Go to that 2-day chart. What do we see there? First day of this latest 2-day candle down. Price percent oscillator still heading up. And the derivative oscillator gaining upward momentum. So weekly down, 2-day up, don't have a trade here. Just waiting to see how things settle out. What do we see on that 4-hour chart? Crossed over going down, looks very similar to the S&P 500 in the I guess crossed over down, yeah, in the morning, really confirmed in the afternoon. So derivative oscillator gaining downward momentum. Price percent oscillator heading down, green spinning top pretty much at the end of the day, almost a hammer there. So we go from the Qs, nothing there, just waiting for it to settle out, to 20-year bonds. What do we see happening now? Remember, we had the weekly vertical crossover at the end of the week on November the 30th. Wow. Have I said October earlier? I think I did. I am not losing my mind, folks. It is just a long week. So even with the markets closed yesterday. So what do we see going on? Well, we see the derivative oscillator gaining upward momentum, price percent oscillator heading up, of course, after the weekly vertical crossover at this prior week, green up candle, which is, of course, what we would expect with a change in trend going up. We go from that 2-day chart to what? We go weekly to the 2-day chart. What do we see going on there? Well, going into our second day of strong, second 2-day candle of strong up movement. And of course, things are looking nice, doing exactly what they're supposed to do after the weekly vertical crossover. Price percent oscillator heading up, derivative oscillator gaining upward momentum. We look at that 4-hour chart. What do we see there? Looking beautiful. We saw the 4-hour chart crossover going up after the morning session on the 3rd. That was, of course, on Monday. Things moving up in the afternoon. And we saw things that was on Monday afternoon. Things up nicely Tuesday, up nice Wednesday morning. Bit of a pullback, but still up 0.31%. So the weekly vertical crossover is doing its magic so far. Keep your eye on that 4-hour chart if you did jump into that trade. We'll just watch to see how long that magic continues. Don't want to lose what you have earned on that up move. So continue to watch and see what we see there. That's the magic of the weekly vertical crossover. Lastly, we go to gold. Gold is just flat for the day. Now, we see for the week, gold is up, a nice green up candle. Remember, gold crossed over going up all the way back on the 5th of October. And price movements above the weekly trend line. Derivative oscillators losing downward momentum. That price percent oscillator is heading up. Excuse me, we go to the 2-day chart, and of course we're going into the 3rd up candle, first day of that latest. We had that crossover going up on the 2-day candle back on the 4th. So again, setting you up for a potential up move in gold. Derivative oscillator again gaining upward momentum. So what do we do? Now that we have both going in the same direction, we're looking to see what's going to happen on the 4-hour chart. 4 hours been going up a lot longer than the 2-day, all the way back to Thursday, the 29th of November. So what do? Well, we wait for a pullback. We wait for that 4-hour chart to cross over going down and then to move back in the direction of the 2-day and the weekly. That's your jumping in point. That's the other way to play this type of thing when you don't have a weekly vertical crossover, when it's been a while back. Things have changed on the 2-day and or the 4-hour. That's where we are, folks. As we end the day, we'll continue to watch, keep our eye on how things sort out with the S&P 500 and with QQQ, the NASDAQ 100. Of course, should be in a practice trade on TLT. And gold, we're waiting for a pullback, so on the 4-hour chart, so that we can jump in for a potential up move in gold if that sets up. Remember, we're trend followers. We're not crystal ball magicians. That's where we are, folks, at the end of the day. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.